Good morning, it's today again. Welcome back to Joseph's Reserves. I'm Joseph, and I store 20% of my income in the form of rare coins and precious metals. Today, I want to talk about something that I think is extremely important for stackers to understand. And honestly, I think the market over the last several months has given us one of the clearest examples that we've seen of it in a very long time. Over the past few months, beginning in mid-December, I've been tracking the weekly close of 5 different metals. That's gold, silver, platinum, palladium, and copper. Every single week, I've recorded this closing price and calculated both the weekly percentage change and the overall percentage of change since the beginning of this study. I wanted to show you how these metals have behaved relative to one another. So, let's take a look. Congratulations to Training with Lions for being the first to comment on yesterday's video. Thank you so much for the support. Y'all go down into the comments to find him and start a conversation. Now, initially, I thought I would just confirm what we already know when I started comparing how these precious metals move compared to one another. I figured gold would move slowly and steadily, silver would be more volatile, platinum and palladium would swing around dramatically, and copper would just quietly sit in the background. But after tracking all of this data week after week, something extremely interesting started to happen. Copper slowly began outperforming almost every precious metal in terms of percentage gains since last December, and this past week really drove that point home. So these are the weekly closes. Gold closed at $4,541.20, which is a drop of 3.7%. Silver dropped 5.44%, closing at $76.09. Platinum closed at $1,989, dropping 3.7%. Palladium dropped a staggering 5.47%, closing at $1,434. Copper closed at $6.23.08, which is actually a rise of 1.51%. And here is a chart that I've made tracking all of those percent changes from about mid-December 2025 all the way to today. If you look all the way on the right side of this chart that I've made, you can see copper overtake silver in the percentage of gain since last December. You can see in the chart that copper overtook palladium and platinum in January, overtaking platinum again in March, then gold in April, and now silver. So I'm not sure what any of this means, but what I do know is that stackers should probably not start putting all of their money into stacking copper. I'm not telling people to aggressively stack copper right now. In fact, I actually think that copper premiums are still far too high for most stackers to seriously consider a large position. Physical copper carries enormous premiums compared to its melt value, and because of that, it's honestly not very effective to stack in large quantities right now. But what copper's performance does tell us is something very important about diversification and about how different metals behave at different market conditions. This is one of the biggest lessons that stackers need to understand. Not all metals move the same way at the same time. Every metal has its own personality, its own role, and its own behavior within the market. Gold behaves different than silver, silver behaves different than platinum, platinum behaves different than palladium, and copper behaves different than all of them. And this chart that I've made has given me a perfect visual example of that reality, especially when looking at this week. When we look at the data of this past week, palladium experienced the largest decline, silver also fell significantly, platinum declined as well, although not quite as severe as palladium and silver, and gold also dropped, but importantly, it dropped much less than the others. Meanwhile, copper actually rose, and that difference tells us a lot. Silver is often viewed as the high beta precious metal. What I mean is that silver tends to exaggerate whatever direction gold is moving. When precious metals rally, silver often dramatically outperforms gold, but when precious metals decline, silver also tends to fall harder than gold. This is something that long-term stackers eventually begin to notice after watching the market for years. And honestly, this is one of the reasons I believe in diversification across multiple metals. A lot of stackers become emotionally attached to one specific metal. Some people become gold maximalists and others become silver maximalists. Some people love platinum because of the supply fundamentals, and others focus heavily on palladium or even industrial metals. But what this data demonstrates is that every metal has its strengths and weaknesses depending on the economic environment. Silver has incredible upside potential. We clearly see that in the data as well. Throughout this study, silver has repeatedly outperformed gold during big upward movements, and there were periods where silver's overall gains absolutely exploded compared to gold. At one point, silver was up over 50% at the beginning of the study, and gold was sitting around 15 to 20%. That's an enormous difference, and that's why silver stackers become so passionate about silver. When silver runs, it runs extremely hard. The volatility works in your favor during bull markets. A relative small move in gold can create a massive move in silver. Silver attracts people who want growth potential inside the precious metal space. But there's another side to that equation. When the market turns downward, silver also tends to fall much harder. We saw exactly that in the recent months. While gold pulled back modestly, silver experienced significant large percentages of decline. And that's because silver behaves both as a precious metal and an industrial metal at the same time. Gold is primarily viewed as a monetary wealth, and silver sits in a strange middle ground. It's both a monetary and industrial metal simultaneously. Because of that, silver becomes much more volatile depending on economic expectations. Gold, on the other hand, performs very differently throughout time. Gold moves much slower. Gold is steadier. Gold does not produce these explosive upsides that silver did. When the market is corrected, gold protected its value far better. Even during major declines across these metals market, gold consistently held up stronger than silver, platinum, and palladium. And this is the argument that people who are all in on gold use. Gold is stable, gold is confidence, and gold is a monetary trust. And I think that this is one of the biggest psychological misunderstandings newer stackers have. People often look at gold and become disappointed by the slow percentage of gains compared to silver, but what they fail to appreciate is the gold's purpose is not necessarily explosive growth. Gold's role is wealth preservation and stability. Gold is the anchor, while silver is the accelerator. And honestly, I think that a healthy precious metals portfolio would need both. If you're entirely concentrated in silver, you may experience large gains, but during pullback markets, you'll expose yourself to significantly larger volatility during downturns. And on the other hand, if you hold only gold, you may preserve your wealth more effectively during those difficult periods, but you will miss out on some of the explosive upside potential that silver can offer. This is why diversification matters so much. And honestly, this concept extends beyond just gold and silver. Platinum and palladium showed us another important lesson during this entire time. Both metals experienced enormous volatility. Platinum had periods of very strong upward movement, followed by major corrections, while palladium, meanwhile, became the weakest performer overall by a very large margin. By the end of this period that I was looking at, palladium was actually deeply in the negative compared to the starting point, while several other metals remained overall positive. And this actually shows a major reality of stacking. Supply fundamentals alone are not enough. A lot of people are buying platinum and palladium based entirely on rarity or mining supply statistics, but markets are driven by demand as much as supply. Industrial demand shifts can dramatically alter the trajectory of these metals very quickly. Palladium especially has shown how dangerous concentration risk can become when industrial demand changes. And that brings us back to copper. Copper's behavior throughout this entire period is honestly one of the most interesting parts of this entire data sheet that I've kind of put together. While precious metals experienced a substantial volatility, copper steadily climbed higher overall and over time. Even during weeks where multiple precious metals declined, copper often remained relatively resilient. And now copper has actually overtaken silver in terms of overall percentage performance since last mid-December. And this is a remarkable outcome because copper is not traditionally viewed as a wealth preservation metal by most stackers. Copper is often viewed primarily as an industrial metal. Its demand is heavily tied to construction, infrastructure, electronics, electrical grids, manufacturing, and energy systems. So, what could this mean? Well, one possible interpretation is that industrial demand expectations remain extremely strong. Copper is essential to modern infrastructure. Electrical vehicles require large amounts of copper. Renewable energy systems require enormous copper usage. Electrical grids require copper. Data centers require copper. Industrial expansion requires copper. In many ways, copper is a direct reflection of industrial growth expectations. Now, again, I'm not suggesting that stackers suddenly abandon precious metals and move entirely into copper. Personally, I still believe physical copper premiums are far too high for aggressive stacking. When you buy physical copper bullion products, the premium above melt is often extremely large relative to the actual underlying commodity price. Remember that copper is priced by the pound, not by the ounce. If it's $6 a pound, that comes out to about 35 to 40 cents per ounce. No one should be buying a 1 ounce copper round for $5 to $10 an ounce. That doesn't make any sense. And yes, I personally do own quite a few copper rounds, but I only buy them if I can buy them at the true spot price or if I'm given them as a gift. So overall, what can we take from this information that I put together? It seems like in a bull market, it's best to have silver. In a bear market, it's best to have gold. I think that having both would be the best option. Hold silver until it runs up and then trade it for gold. Once you think it's about to run up again, trade back into silver. Although I wouldn't be doing this with your entire stack, you could do this in small movements back and forth with maybe 10 to 20% of your stack so that you can change your position slowly as your belief changes about where the market's going. That is a little bit of what I do. Pretty much, I keep a specific percentage of the total value of my stack in silver and in gold, and as one runs up faster than the other or one holds up better than the other does, that percentage will slowly change over time, and I sell one metal into the other to correct that percentage as I see fit. Now, saying that there's no perfect percentage of silver to gold within your portfolio, what I would suggest is consider your personal risk tolerance, how much volatility you want or can stand, and go from there. Of course, I'm not a financial advisor. Nothing I'm saying here is actual financial advice. I'm just letting you know what I personally do and suggesting you consider doing the same thing. Speaking of what I'm doing, you are now looking at the second minted 5-ounce Joseph's Reserves bar. And I do have the third one right here that is not stamped yet. These bars may be out for sale sometime soon. I haven't decided if I'm going to sell these ones or what mintage I'm going to get to before I start selling them. But I am starting to melt some bars, so keep an eye out for these. In addition, I do have a website for y'all to check out, josephsreserves.com, where I sell my merchandise, t-shirts, hoodies, hats, coffee mugs, as well as my zipper pouch and coffee. Those two have been my best sellers. The zipper pouch, honestly, I absolutely love it. I use it to hold 100 ounces of junk silver, so it can actually have quite a large capacity. But this is going to be it for today. Thank you so much for watching. If you like this video, hit the like button. Go into the comments section to start or continue a conversation with those down in the comments. Share the video with someone you think may like it, and subscribe if you haven't already. But just remember, every ounce adds up. So no matter how small, just keep stacking.